All right. Welcome, everyone. We're going to be discussing the U.S. payroll version of Sage 300 and also the Sage HRMS, because obviously the Sage HRMS uses the Sage 300 payroll application. For those of you that did not know that, now you do. It's a great payroll solution for companies of all sizes and does a very good job of cutting payroll, doing the 941, 940, and state filing requirements and submitting those reports, and then also with the Atrix subscription, making your payments automatically as addition to filing. So I'm going to share my screen right now, and hopefully all of you are now seeing the Sage 300 U.S. payroll setup. Can somebody confirm that they can see my screen now?
Got it. Yes.
Okay.
Yes, I can see it.
Wonderful. Okay, today I promised I would talk about things like deductions and accruals, reimbursements, things of that nature that maybe some of you aren't aware that are available. I will also go over assigning those earnings and deductions in mass. In other words, if you have created a brand new deduction and you need to roll it out to some or all of your employees, I'll be going over how that works. And then also some of a newer feature here, which is the common deduction limits. We'll be discussing some of those. I do want you to feel free to ask any questions that you would like during today's session. Don't be shy. I know most of you normally are, but I don't want you to feel like you can't ask questions just because we're recording the session. Let's get right to it and go into the Earnings and Deductions tab here, our icon on our window, and then that's going to open up the Payroll Earnings and Deductions window. We're working in the sample company today, and we're going to discuss some of the deductions that are already set up here, and then I'm also going to trigger some of the other features and functionality by trying to mimic setting up other types of deductions that your company might use, like tips and allocated tips, and kind of go over some of those and how those are used as well. So not everything may be applicable to how your business is being run, but just be patient. I'm sure we're going to find value in today's session for all of you when it comes to setting up deductions. So let's start off by just looking at the Finder here for a couple of the sample deductions that come with Sage 300. The first one is the 401k. And obviously this is a deduction, but it can also be a match point for the employer. And you have different ways that employer might be able to contribute or match that deduction. And those are things that you select during the time that you're setting up the deduction. We also can indicate whether we want it to print on a check, when we want it to start, and other important things like, is it W-2 reportable, what percentage, if there's a flat percentage or a flat rate that is always applicable as a base, you can set some of these defaults on these tabs so that you're doing less work when you get ready to add this deduction to the employee. Okay, so this is just one example, and you'll notice that they've chosen employee calculation method of percentage of base. So that means that there's going to be a base of the employee's percentage that's used to calculate this particular deduction. There's also some some limitations. So there might be min or max, and there'll be some other deductions that come up down here, like secondary rates that you might want to charge after a particular point in time. But depending upon what you select back here on the Basic Info tab with regards to the deduction type, the category, and the employee calculation and employer calc methods, depending upon how these things are selected here, you may or may not see other screens pop up on other tabs or other fields pop up on other tabs. So we'll try to go over most of those today, and I'll get to them. There is cash advance, so we have a category called advance, and obviously that's when you're giving an employee money. Maybe it's for a business trip or something of that nature, and you want to allow them to repay that advance at a later time. And we can do that with the very next advance payment. And you'll notice that this is a deduction, whereas the other was an advance. And so we can see that this has been marked down here as a repayment deduction to this advance. So we've selected here the previous earning type, which was advance, and put that in here as the repayment portion so that this ties itself to the original advance that was given, and then you can make a deduction from that employee's paychecks for advances that you may have given them. Maybe you're giving them an advance because you want to pay them because they're getting ready to leave on vacation and they want extra money, and you know they're good for it and they're going to be coming back and they can always repay you. So that's how these kind of things are used in SAGE and how they can all work together. So these two, the earning and the deduction, are tied together, or in this case really it's an advance and not really an earning. There's a bonus, and you can actually set up a calculation method that is on a wage bracket table or a sales commission table. So those are some of the other calculation type methods that we can use when we're setting up a pay type. You'll notice that as we're going through these, some of these things are grayed out. And what that means is that you obviously can't change something that's grayed out, right? So if you set up an earning, as soon as you save it, it will lock in certain aspects of that particular deduction or earning that you have set up and not allow you to change them. We have, this is a charity fund, so maybe this is a donation type thing that employees wish to have money reduced from their paycheck for that they're giving to a particular charity that maybe your company is funding as well. And so the company might be matching whatever the employee is putting in here, and that's exactly what's going on here. So you can take advantage of these kind of things, not just for the benefit of payroll, but for the benefit of the company as well. Commissions, so as you can see, this one is set up to use a sales commission table. Okay. Go look at some others. This is a compensatory time, so this is an accrual type category. So it works a little bit differently. Notice how there's a lot of these things are now blank on the screen where it was talking about the employer match type in the employee calculation method. Well, that's because this is an accrual type category, so it's a little bit different. So when we define an accrual, we need to give it the terms of how we are going to establish that accrual, what's the basis for carrying over any accrual amounts at the end of the year, and if the accrual is subject to any taxes and that sort of thing. Expense reimbursement is another type of category that you can utilize with Sage 300, and this is just perhaps reimbursing the employee for the travel expenses that they were on. So you can set up those types of categories when you're creating a deduction or even an earning type. So the difference between an earning type and an expense reimbursement is that the employee has already paid taxes on the amount that you're going to reimburse them for. So it will not calculate any payroll taxes on that expense reimbursement amount that you're giving back to the employee. So that's a really nice thing that the payroll module does. And then lastly, there's benefit. So a benefit can be either a cash benefit. So maybe if you gave your employees a $200 cash benefit at the end of the year for Christmas or something to that, you would still need to show that you had given that amount to the employee. We also have a non-cash type benefit, and that is when you're not providing cash, but it's a non-cash benefit. For example, use of a company automobile. So it's not increasing the net pay, but it might be taxable as income. So when you set up a non-cash benefit, you can choose to post amounts for it to expense and employer liability accounts, okay, over here in the GL distribution. So this would be the expense account and then the employer liability account. So again, depending upon what you select here on these fields, it's going to make the program show up new fields or act differently depending upon the category and the type that you have chosen. So now I would like to go in and just create a new one here. And I'm going to, for the moment, just talk about each of these fields here, okay? And depending upon, I'll make some changes to things, and then you can see how things like FLSA overtime calculation will disappear when we select certain calculation methods, for instance. So the first one here is the category. And this is going to define whether it's an accrual, a deduction, a reimbursement. So you're defining what type of category this new earning or deduction is. So if we just start off with the top one, which is accrual, okay, you can determine a base for the accrual of vacation time and sick time. There is also in the link accrual earning field, you can enter the specific earning on which the sick or vacation accrual is based. So depending upon, some of the options that you select here, you can link them and have them show up. So hours per hour worked is employee calc method. So is hours per frequency. And now, depending upon what you've chosen here, you can see that our frequency window popped up. Okay. So really, depending upon what you choose here, and now we have the calc base window, okay, which is where you would define all of the earnings that are included in giving this employee an accrual of vacation in this instance. So those are your three choices here for your employee calc method. If I choose sick, it's just the same, okay? And then your compensatory time, notice how all of that completely went away. And compensatory time can be accrued in payment for overtime hours worked, okay? So we would be defining what that is and how many hours an employee worked is going to be helping us define the compensatory time that they're allowed to take. So all of these things are, again, just for accrual types. And we also can indicate the level. And I'd like to talk about levels for a moment because this is, I know, causes a little bit of confusion. So the level actually is determining whether one earning or deduction can be included in the calculation base of another earning deduction. Okay? So the system automatically assigns a level to each earning and deduction that you set up. And this level determines whether one earning or deduction can be included in the calculation base of another earning or deduction. This level also determines which taxes an accrual, earning, or benefit can be subject to and which taxes can be taken after a deduction is taken. Essentially, the levels determine the order in which earning, deductions, and taxes are calculated. Okay? All calculation-based earning deductions must have levels that are lower than the earning deduction whose base it constitutes. Because most earnings are subject to tax and most deductions are taken after taxes, the system defaults a level of 10 for all earnings and deductions and a level of 20 for all taxes, which is over here. Okay, we're not going to go into taxes today, but it's an important part of understanding the levels. So you may need to edit the levels of a particular earning or deduction in order for you to be able to see it in the calculation basis, which it's not going to show up here. But when you're looking at your earning or your deduction, you will see that. Some things may not be available over in your calculation base, either as a wage or a tax, and that's because you would need to change the level of the deduction. or the earning, depending upon which way it needed to go. So earnings and deductions that are assigned the calculation method of amount per hour, hours per worked, percentage of base, and wage bracket table, these use other earnings and deductions and taxes in their calculation bases, so their levels have to be higher than the level of the earning or deduction in the calculation base. If in doubt, if any of you have any questions on how to use levels or when they come in to play, we're here to answer those kind of questions. These are things that we go over in training when we're doing payroll with somebody when we're setting it up for the first time, but I know it's not something that a lot of people retain or understand how these levels are applied. So you need to understand how levels are affected, and also when levels can be low, because when levels are low, earnings and deductions with the calculation methods of flat, fixed, hourly, and piece rate tables, some of the other tables, like commission tables, they don't use earning deductions or taxes in their calculation basis, so their levels can be low. And these earning deduction types may be part of the calculation base of another earning or deduction with a higher level. So, in short, the levels can be confusing. I don't expect you guys to remember everything I just said about the levels, and if you already knew a little bit about the levels, maybe that can help sort of explain it a little bit better, because it is a little confusing sometimes when you're setting things up. Let's also talk about the other. First of all, before I move on from accruals, does anybody have any questions on that particular category type? You'll also notice that we can choose to print this earning or deduction on the check, okay? And is it subject to workers' compensation? So those two buttons are generally always available to show it on the check. In also the accrual under the employee portion, this again, as I said, is where you're defining how that accrual is going to work. So you can indicate that through service year 1, maybe the max amount that they could accrue is 20 hours or 80 hours, and that their max carryover amount might be only 40 hours. So you can have a maximum accrual amount that's different than the max carryover. And again, depending upon what you pick here, like we've got it set for compensatory time here. If I choose vacation, you'll notice that there's a lot of other fields here. We have beginning and increment that are new, and then we also had the max accrual and max carryover. So depending upon what you're selecting, again, on all these windows, it can determine how things are going to be calculated. Also, when you're setting up an accrual, it's asking what taxes are subject to that accrual. So in this case, we would want to make sure that all of our taxes that would be applicable to the employees for vacation would be included, so that it's calculating when we pay that employee out under the accrual, which is reducing the amount that they have on hand of vacation or compensatory time or sick pay. We want it to make sure it takes out the appropriate taxes, and that it's included when it's creating the garnishments and things of that nature. Is it subject to? The GL distribution, this is for distributing the expense in this case, because obviously there's no employer liability. Well, there technically is, but it's obviously an expense when it's used by the employee, but it's a liability when it's being accrued, right? Because the employer may or may not need to pay out that amount, and they may or may not want to book that accrued amount on their financial statements to indicate how much payable in vacation time is out there for a particular employee or the whole company. And then optional fields is just if you have this module and it's activated, what optional fields do you want to set up for that particular, in this case, accrual type. Okay, earning is the next one, and there's quite a few more choices here under earnings types. So earnings, we have the option of having salary and wages or reported tips and allocated tips. So salary and wages is my guess what most of you are using, and I don't know that anybody on this call uses reported tips or allocated tips, but if you do, I'd be happy to cover those if you wish. Salary and wages also wants to know, well, how are you going to be calculating this salary and wage earning type? So we may say that they're getting a flat amount, okay, or a fixed amount, hourly rate, amount per hour, and of course when we select these things, notice how over here on the right, all of this changes. So if I go now and select piece rate table, we've lost a field choice over here to the right. So again, understanding what you want to set up here and how it's going to be recorded and need to be reported upon is important for understanding how to set up a deduction properly or an earning type properly. So the hourly is just saying you're going to pay somebody an hourly rate, whereas an amount per hour is a little bit different. You're just going to give them a set amount per hour. You can also indicate whether this is subject to workers' comp, whether you want to print it on the check, which I assume you would want to do that. And then we also have this thing called cost center override allocated based on calc-base. And so we also have a field here for billing rates, and I want to talk about those two things a little bit here because they kind of go hand in hand, or they can. If any of you are using cost center overrides, this is going to override for purposes of spreading out the cost of that employee to a particular cost center in the GL. Okay? So if you select this option, the payroll program is going to prorate these types of wage expenses according to the earnings and deductions on which they're based. Okay? And payroll uses items in the base earnings include field of the calc base tab, okay, which is over here, to determine or when determining how to prorate the earning and deduction code. The deductions in the deductions base include field, and the taxes in the base tax include field will be deducted from an earning base to determine the base. We also make sure that we set these up so that things are subject to taxes when we're working with salary and wages. We have GL distribution that we need to allocate, and this is where it becomes important when you're using that calculate cost center override. And we're also establishing what cost center the employee belongs to when we've selected that choice. So the billing rates, I won't go into a lot of detail on this, but this can be useful when you're using the project and job costing module, which is over here, okay? And if you're not using it, it's probably not something that you're even going to have a choice for if you are setting this up. So the billing rates would only appear here if you're using the project and job costing module. And what that does is it allows you to bill out a portion of this employee's wage, and even though it might be assigned to a particular cost center, you can still use it to bill out that to a particular job. Okay, so maybe this employee's time is going to be getting billed out to a particular job, and that's how you can classify that these billing rates are going to get, billed out for this particular employee in the project and job cost module. And again, for anybody that would like more information on that, I'm happy to have, set up a separate section where we could talk about that. Now, the hourly rate, we also can choose our frequencies. Okay, and frequencies is another thing where it's important to understand what these different frequencies are, because it's going to determine, okay, what frequency the deduction is coming out of the employee's paycheck. So if it is set to float, that means it's going to be using whatever frequency of each employee is. Okay. It's also important to note that float is not selectable if you're using hours per frequency for setting up an accrual. So if you have something that is pay frequency accrual or any earnings deduction that uses piece rate, it's not going to be an option to choose float. So, sorry, piece rate. And now notice that float is not available because piece rate table is pretty explicit. You're not floating it. It's not based upon any type of frequency. This has nothing to do with really frequency of float. So float is available only on certain employee calc methods. That's the main thing to take away from that, and you can play around with it and see which ones it shows up for and which ones it doesn't, if remembering what I just said is too difficult there. Daily means that obviously if you're paying the employees daily, maybe they're doing some kind of labor where everybody is getting paid daily because they're maybe summer work or it's just a temporary, so they're getting paid every day. You can choose that frequency. Weekly is, of course, weekly payroll. Biweekly, I think most of you understand all of these different frequencies, but I did really want to just have you understand what float is for. And I'll show you it's picking up what I'm talking about here. If we go underneath the employee section, whatever their frequency is here, biweekly, daily, that's what it means when it's picking up the employee's frequency when you have it on float. Okay, so that's the frequency it's referring to with float. Date of hire is just when do you want this particular deduction to start? Maybe it starts on a specific month or day, or so many months after they're hired, or days after hire. So that's when it would kick in and it would start calculating. If a deduction ends on a particular date, obviously we can put that in here as well, and then it wouldn't allow this deduction to be calculated again, say, at the end of the year when you know that you're no longer going to be using this particular earning or deduction. Just know that if it's, you need to create something to replace it, you'll make sure you want to have it start on the date of the employee's pay period, not the paycheck date. So keep that in mind when you're setting these things to either start or end on a particular date. The employee tab, so we get to establish what is the base hourly rate. So maybe this is going to be the minimum wage for whatever it is for your state. And maybe that's just the default that comes up because when you hire a new employee, they're always coming in at, say, the base rate or whatever your minimum wage is for starting somebody out at your company. It doesn't mean that you can't change it on the employee record. It's just setting it up as kind of a default. Percentage of base. So, again, this would just be saying, okay, if you're going to calculate a deduction or an earning, they definitely need to know what is going to be included when I calculate this deduction. So that's what they're referring to when they talk about percentage of base. And then the sales commission table, you'll notice that there's a new field here, new tab, and we can indicate what is our pay. So if they have done so much sales from 0 to, say, 5,000, and then they get a certain percentage, and then billing percentage, well, whatever that might be. And you can keep adding those brackets for your sales brackets. I've actually not seen anybody use this before. Do any of you use it? No? Okay. All right. I'll take that as a no. Okay, so let's move on to talk about advances really quick here. And we kind of did that earlier because it was actually a really good setup of a sample company that had this, so we won't spend a lot of time on advances, and they're pretty straightforward. You can have a cash advance or a non-cash advance, and it's pretty simple to establish. It's just a simple category, cash, and then what's the frequency, how often you're giving an advance to somebody. Maybe you do them every quarter or monthly, just depends on what the situation is for their traveling or whatever the circumstance of the advance is. And then what is the amount that you're advancing? And again, this is just a default. And then you also have down here now annual maximum and lifetime maximums that you are advancing. So maybe you have a policy with your employees that they're only ever allowed to annually request up to $1,000 of an advance, but they have a lifetime of $5,000. So those kind of things can be turned on and activated for that. And then obviously if we go to this field, if we choose non-cash, we still have what is the amount. And then you also notice that you've got your advances receivable. I wish I could expand it. It's not letting me expand it. I think probably because I need to create a new deduction in order for it to happen. So let's just do this. Oops. Let's go back to this advance, and then we can see it here. So this is just the advances receivable because obviously if you're advancing somebody, they owe you. And then if we go to the repayment of that, okay, their repayment, but you'll notice there's no GL fields here because there's no distribution. You're already tying it to the advanced receivables account, and when they repay it, it is going to obviously credit that GL account that you associated over here. Okay, so the system is smart enough to know that when you're doing this advance payment and you're tying it to here, that this is the way you want it to reduce that original advance receivables account. Now, you don't have to do that if you're creating an advance. So if we go here and we say cash, then you don't have to indicate that you are going to pay it back to that account, and then if that were the case, you would just simply put in a different GL account here for wherever you're wanting that to go. But most people would tie it out to the advance account that they're trying to do the repayment on. It just makes it a little bit easier. Okay, deductions. So there's all kinds of deductions. This is the main crux of what we're going to talk about today, but I will get to the others as well. A deduction is how you take money away from the employee for services that they need, like health insurance or dental or eye, or maybe some other type of a deduction for a charity, whatever the case may be. The deduction can be established here and defined, and depending upon what you choose here, you're going to get different options up here. So if we use, again, percentage of base, it wants to know all the earnings and the deductions and the base taxes to either include or not include when you're making this calculation for percentage of base. Okay, amount per hour, that would be if you're going to take so many dollars out for every hour that they worked. What most people are choosing is flat, and then they're going in, or they're choosing percentage if it's something like a 401k. These are the two most popular. So flat, employee calc method, you're just saying, I'm going to take out a flat amount. And you can establish that default here and then change it on the employee, especially if all the employees are different rates for something like a 401k. If the employer isn't matching that, obviously you would select none, but you could also do it employer calc method, which now we have an employer tab, same as the employee tab, okay, and it wants to know the amount here. And we also can do the percentage of base. And then for the base, it still, again, wants to know, okay, even though the employee is doing flat, okay, the calculation base for the employer may include only regular and overtime pay, for instance. So you've got lots of flexibility here, and you can even choose percentage of employee contribution after it's flat, or if you're doing this. Okay, so really it's very flexible in what it can do. We've got the cost center override, and you'll also notice that we have this thing called repayment deduction. Okay, now that's where if it's the advance, that would be when you would check that. Okay, so if we were setting up a deduction to repay that advance, it wants us to establish what that advance code is. But again, you don't have to do that, and then you could just define your GL account here. You've got, again, the different frequencies, and then really importantly is that level. We also have on the employee tab whether something is W-2 reportable. So if this was health insurance provided by the employer, you would be putting down that this is an employer-provided health care, if that was that kind of a deduction that you were doing. And we are always happy to help you or assist you where possible with the W-2 reporting and understanding which is the correct box that you would like to select for that. But it's always best to get with your accountant if you're not sure which field it is here. There's also the annual maximums and lifetime here, and then you've also got a secondary rate, okay, that's showing up because we're choosing percentage, or maybe we want something to kick in at a particular point in time. So if I go back and put that back to flat, the secondary rate, maybe it's $50, and when can it be effective and for how long after lifetime maximum is reached. So maybe that's when that secondary rate is allowed to kick in, or after annual maximum reached. An example of when you might use this would be when you're setting up a 401k, and I think there is a percentage after somebody is 55 that they can use another rate after they've already satisfied their annual maximum. Does anybody want to comment on that or know about that? 55, age 55 catch-up rate. So that could be a way that you could establish that secondary rate. If we're choosing that percentage of employee calculation or contribution, then it wants to know what is the percent that you're going to contribute. So if you said, well, we're going to do 50% of the employee's contribution up to the employee contributed amount of, say, monthly 150 or a monthly maximum or an annual maximum. So you've got a lot of choice here too. Okay, that's how it's going to be calculating the employer's portion, depending upon what you choose here. Or it's no limit, which turns everything off. Okay. And then you've also got, when you're doing your deductions, obviously the GL expense account and the liability account, and then if there's an employee liability account, so there's employer and employee liability accounts that you're putting in here. So if we go over to that, you can see all of them. Employee and employer. So what are these different codes here? This is because things are maybe going to a different department or how you want employees to be assigned to a particular GL account. So that's what different codes are for, because everybody may not be going to the same expense account for 401k, for instance. And maybe you don't want them all going to the same employee or employer liability account. So this is allowing you, if you have a way to separate things by a department in the GL or a GL account, you can do that with this particular program. So all of these are different GL accounts here, but you'll notice the employee and employer liability are all the same. Okay, any questions on the deductions and what we've talked about here? I'm going to go up to my chat window. It looks like, Craig, you had asked, can you show the other tabs for reimbursed expenses? Did I do that for you? I think I did.
Yeah, I think for the most part.
Yeah, so we'll get to that one. There's not a lot here when you're doing expense reimbursement other than do you want to print it, and then you've just got the employee tab for the amount, and then the GL distribution. So that's on expense reimbursement. It's pretty straightforward. And then obviously you're establishing, well, what's the expense account that you're wanting to use for that expense reimbursement? Because if you're reimbursing the employee, it's probably because they've bought something on behalf of your company, and they're just trying to get reimbursed for it, and thus it would be an expense to you because that you're repaying them.
Right.
Benefits. So again, we talked about that there's cash or non-cash type benefits, and the other thing that we can decide to do here, you'll notice when we choose cash, the little button that was in here went away, but if we choose non-cash, then we can indicate whether we want that to post the benefit to the general ledger, okay? Because if you're doing non-cash, maybe you want that option to post that amount to the general ledger. So notice when we click on that, the GL distribution tab now pops up. We have the calculation method, so how do you want to establish or give out that benefit? Do you want to do it through a percentage of the base or a wage bracket table, a sales commission table, amount per hour, how do you want to establish that? And then what is the frequency of it? Now, if you have a frequency that you don't want it to occur every time, maybe you only want it to occur monthly, okay, then you can set it to monthly, even though the employee is biweekly. Just make sure that when you're calculating your payroll and it's time to do that monthly calculation, so even if you've got biweekly employees, you're still going to need to select your monthly earnings and deductions with those frequencies, or it won't pick it up, right? So you have to make sure that when you're getting ready to cut pay that you are marking that if you're going to choose a frequency that doesn't match what your employee has. Same thing, you've got your levels, and then those are how the calculated base is determined for other. So if you have, say, your level at 30 in here or 99 or something like that, you may not see any of these base hours show up because you don't have the right level. So that's a frequent thing that happens, just so you know, when you're setting up a new deduction, that if the level is too high or it's too low, you may not be able to pick things over here in this calc base column. Okay, I think that's really all of the categories. So do you guys have some specific questions before I go on to talk about assigning these deductions that we set up and changing them? Does anybody have any questions, or have you run across something that you couldn't get the system to do for you properly? Does anything come to mind for anyone? It's a perfect system? Okay. So let's move on to, somebody put us on hold. Okay, don't put us on hold, whoever put us on hold, because then we hear hold music, so be careful about that. Let's talk about assigning earnings and deductions to our employees. So after you've created your new earning or deduction, you can go in and establish a really easy way to assign this to everybody. We can assign it to the employee or a class. We can do it by way of a selection list, or set criteria is my favorite. And when you click on set criteria versus some of these others, you'll notice that all of these fields get grayed out, right? Because it's expecting us to set our criteria right here with this button. So when we set the earning and deduction assignment by criteria, it then gives us a whole new opening. So I may say, well, I want to assign this by only those employees that have Texas as their state code, because this deduction or earning only applies to those people that live in Texas. So if I say okay to that, I've now set my criteria and I can see it here. So what this is going to do is it's going to try to go out and find every employee that lives in or has a Texas address for the state code and assign this earning or deduction to them. We also at this time can say that we want to change the rate, or how we want the employer percentage to be, either more or less. Now, it's getting these from the default of the 401k deduction. You can override these at the time that you're putting them in. So if I wanted this to just be 2.5% and this to be 25%, okay, I can do that here before I do my assignment. I can also choose what distribution code that I want all of these employees that I'm assigning to have. Now, if this is my Texas division, I already know that that's our retail, and I would want it to go to that particular general ledger distribution center. And then these min-maximums would come over if that particular deduction had them established there. And it would also set those up for those employees. Okay? So I'm going to hit this assign button just so we can see what happens. Okay, it says that 401k has been assigned to one employee. So now I can say I want to print the assign earning and deduction report, and I'm going to say yes. And I could tell it to include billing information, sure. And here is the employee that got assigned. So employee Joy Margaret Elliott was assigned, and then these are the values that it's now assigned to her. So if I close this down, and I realize, you know what, that is not the employee, that's not what I expected it to do, you can either say, yes, go ahead and assign it to the employee, or you can close it. Okay? So closing it is going to not assign it, so it's going to interrupt the assigning process. So I'm going to hit close, and I'll close this. And it's now letting me, if I want to make additional changes, I could go in and make put in other settings, or maybe I chose the wrong earning or deduction. Okay, maybe I meant to do the bonus. But notice it still has my criteria, okay? But depending upon the earning or deduction type that you're choosing to assign, other fields may or may not appear here for you. So you want to be careful and make sure you're looking at all of the different fields that come up, and making sure that everybody in Texas, you're okay with assigning them to this GL distribution code and this workers' comp group code and the work comp code rates that are established with this particular code. Include an FSLA, Okay, and then we can go to the min-max, and this is where you can establish the annual maximum that you're going to assign to all these people in Texas. And a lifetime maximum, maybe you don't have a lifetime maximum. And then again, I can hit assign, and it would go and assign those. But you might want to put the rate in first. Okay? And if you're using the compensatory time and you're using that as part of the calculation base, if bonus is part of that calculation base, you're probably going to want to put in here how many hours that might be, contributing. Maybe it's in a quarter, but quarterly a bonus, but you'd probably want to put in how many hours that represents so that it could be included in your compensatory time calculation. Any questions on assigning earnings and deductions to employees? Okay, and you can do that with all of the earnings and deductions. Okay. There's also one for taxes, okay? And then the other one I want to show you is update earnings and deductions for all employees. So this would be if you, let's say you've established a new rate that you're going to give to all of your 401k employees that are currently using 401k. So in this case, if we're giving it to all of the employees and we've changed the rate to be now employee rate is going to go up, which also means the employer rate is going to go up, we can indicate that with this type of a change. So we're going to do this across all employees that are assigned this particular deduction. So we're going to that means we're going to leave this blank, okay? But I can do, again, either class, maybe a particular class code, or I can set that criteria, which I like to do, because then that gives you more control over who's going to be getting that change. So in here, for instance, a lot of people will use this to change the calculation because maybe they don't want to calculate 401k for this next payroll. So this is a really fast way to come in here and change it. So you would double-click on the type of change field and say replace, and then the match current value, yes, and the current value to match. Would you new value, sorry. So this would be what you want your new value to be. So current match would be yes. So we're saying anything that's yes, turn it to no. Okay. I can also just come in here and say new value or change it to yes. Or change it to no by replacing it. If I don't have anything selected in type of change, it's not going to do anything. So here we were talking about we're going to go in and change, or in this case, increase the rate. So we're going to go over to this field and say what we want that new rate to be. So let's just say 15 is what we want the new rate to be. It's in a percent. And then the increase here, we're going to increase it, or we could just say let's replace it and make it be 100. So 100%. So this is just going to increase the rate by 15, and I believe it's at percentage, so it's going to increase it 15. And then here we're saying replace the current percentage, whatever it is, with 100. So now it's going to be 100% match from the employer. So let's hit update on this, and we'll see what happens. 25 employees have been updated, so let's print that report out. And we can see what it did. Okay, so here we've told it the employee rate, we're increasing it. The current value is 5. The new value is going to be 20. So it increased it 15 points, so to speak. The current value was 50. We've now replaced it with 100. And so on and so forth. So you can see how what we've done has made a change or impact. And again, once we have reviewed everything on the report and we like it, we like what we see, again, we can just go back in here, tell it yes if we do like it, or close if we don't. And then you can go back and redefine your area here to do what you want it to do. And again, you can use that set criteria. Just because you didn't use it the first time doesn't mean that you can't now use it this time, because maybe you want to exclude employees that are from Texas. So this would be not equal to TX in this instance here. So then now it's not going to have any employees from Texas that would be included in that, because we've stated that here in our criteria. So it works very similar to the assign. Okay. The other thing that I want to talk about just briefly is the common deduction limits. So the common deduction limits are if you have a minimum or maximum that you want to establish for personal deduction limits to a particular deduction. So, for instance, that 401k, if it didn't have a maximum for the employee and the employer, and you realized that halfway through the year, you can go in and set a common deduction limit. It'll go in and change that for all employees that have been assigned this deduction. Okay? So for these two, we are now saying for those two deductions, go find every employee that has been assigned that particular deduction and set these for the employee annual maximum and the employer annual maximum. Okay? So if I do that and run it, it's going to automatically assign that common deduction limit. Well, everyone, that is all I have for you today on earnings and deductions and how to set them up and assigning them. Does anybody have any questions for me at all about payroll? Anything at all? Now's your chance.
Karen, I have one. What about auto calculation for overtime?
What about it?
Will it calculate and automatically assign overtime rate to say anything over 80 for a 2-week period or over 40 a week?
Yeah, and you have to, in order to get it to do that, you have to do a couple things. First of all, you have to indicate the pay periods in your year and the hours per frequency, because without these, it's not going to do anything. And then we also need to put in the maximum annual part-time hours, and minimum wage needs to be put in, and then obviously how your start and stop times are calculated, number of decimals. So all these would have to be filled in properly.
Okay.
First, and then obviously you would also need to establish an overtime schedule. That's a secondary thing that needs to be set up for how overtime pay is going to be calculated. So for hours over 8, this is that multiplier for a period of 1 day. Now, for a period of 80, so if it's biweekly, the only issue with biweekly is that it's assuming that you're talking about the entire span of time of 80 hours, right? And so in order to get it to calculate overtime, because my guess is what happens is an employee works 1 week, and let's say they worked 35 hours, and then next week they work 60. Well, that's clearly 95 hours, so it's 15 hours over the 80. But you didn't want to give them the overtime calculation only on because they didn't work enough hours that first week, So they're just trying to make up their hours. So it's really going to be dependent upon how strict you are with how you pay out overtime and what the circumstances are, because it doesn't know that, well, the employee they only worked 30 hours the first week and they're biweekly. And you're not wanting to pay them for 10 of those potential overtime hours, because the second week they worked definitely overtime. They worked 60 hours. Whereas the first week they only worked 35. You're probably saying in your mind, oh, I don't want to pay him for, that much overtime, because the first week they were here, they only worked 35 hours or 30 hours or whatever it is.
All right.
So is that how it's going?
Yeah. So if I understand, it can be set right where you're at there. Either way, either it's based on 40 hours in a 7-day period. So in your case, in your example, the first week there'd be no overtime. There'd only be 35 hours of straight time.
Mm-hmm.
And then in the second week, even though they're getting paid biweekly, in the second 7-day period, if they worked 25 hours overtime, they would get 25 hours of overtime pay. If it was set on if it was set on 80 hours, if it was set on 40 hours, then they would get 35 hours the first time. Yeah,
well,
no,
actually it won't, because
hours.
if the employee, because you're probably not going to put in one line item for 30 hours and then another line item for the second week of 65 hours or whatever. So the system is just you're going to put in 95 hours, and it's only going to pay overtime on 15 of those hours, not the 30 extra over hours that she did work, or the 25 overtime hours, because it's biweekly. But if you put in 95, because that's the total amount she worked in that 2-week span, it's only going to calculate overtime on the 15 hours that was put in. And really, that's the way it should be done, because your pay period is established by
2 weeks.
The 2 weeks. But what I know a lot of employers say is, no, we're going to give them overtime on that whole week. We're going to say that they get 25 hours of overtime, not 15.
Right.
Because they worked 65 hours in that 1 week, but they only worked 30 in the other. Because you've got them set up for biweekly and there's 80 hours in biweekly, it's not going to give them overtime the way that you might not want it to. You know what I'm saying? It's
right. So you setting that to 40 in 7 days would give them the first week they'd be short, but the second week they would get overtime for every hour over the 40. So
yeah, if you set it at
hours.
If you
they would
put
get
in
25 hours.
There's also on the payroll time cards, when you do those, you can have it automatically set to override overtime and put in your own overtime. So you can always override it. Let me pick a time card here. He doesn't have one. Somebody had a time card. There's one. So you can always go in here and say, I'm going to override overtime override. But, in this case, they only work 25 hours, so they're not going to get any. Because that's weekly. Well, that's weekly, so this would have to be 40, or if we could do it like this, 30, and then the next time they worked 65. I'm just kind of giving you an example. And now I don't have overtime turned on, so it's going to give them overtime based on this amount. So you've got your 95 hours down here in total. But because this is weekly, they're not going to get any here, but they are going to get 25 here.
Right.
But that, most people don't want to do that.
Right.
They don't want to pay out here because they know that employee only worked overtime this week to make up for the 10 hours they didn't have here.
Right.
But that's one way to kind of do it, to get it to override. So now we can come in here and put overtime hours override. I could put 25 and then whatever my overtime rate is going to be. If it's not, maybe you're going to pay him 3 times the amount or something. I don't know.
Right.
$55 an hour or whatever. So that's how your overtime override works. But currently it's going to try to pay this person for 25 hours.
Right.
The way this is right now. Unless you override it.
Mm-hmm.
All right, good question. Any others? No? All right, well, I want to thank everybody for attending today's session on payroll, and we look forward to seeing you next month when we do our next class. I don't know what that's going to be, but it'll be out. I think it's already out in the newsletter.